G'day traders, Stacey Burke from Stacey Burke Trading. We're just reviewing the pound USD, the pound yen, and the euro yen for April 19th, 2016. Just going to go over a couple of really simple price action strategies that you can apply that might help you to just see things a bit clear without making it too complicated. All we're looking at here is a 5-minute chart. The pink represents the Asian market session, the yellow the London market, and the green is the US market. The green yellow is of course the US Open and Europe overlap. So just looking at, we've got a 20 period moving average on here. I'm just going to keep that on there. That's purely just to have an idea of trend bias, but we are going to look at some really simple strategies using price action. And what I tend to do, as you've seen in my other videos, is as soon as Asia sort of gets closer to the London Open, we look for a couple things. Number one, I look at the London Open at around 2 a.m. New York, and I look for a higher low to potentially establish itself in the first 3 hours of that market. Now, oftentimes the Asian market will give us a little bit of indication of where there is some order flow happening into the open of the London market. So what I tend to do is I look just mainly at the high and the low for the session of Asia. Now in this particular case, I would be looking for something possibly around the 50% level of the Asian session, and we're just going to draw a support level there. Now as London opens up, the market continues to drive up, so we see order flow coming into the market right away. Now we're not trading that, we're just looking to see how the market responds. And we've immediately got a new high in place, and the market retests that breakout level. Okay, now the high of Asia is significant in the sense that we have higher highs and higher lows just using price action. But immediately we see the market form a double top, and this is the type of double top where that second bear candle stays inside the wick of that first topping pattern. So that's something to look for. Now if you're trading that pullback, you've got to be aware that you are trading counter trend according to price action, where we see these higher highs and higher lows coming into place. Excuse me. Now what's significant is that as we look at the 5-minute chart, if you think about the hourly candles, the top of the hour would typically look to see either a change in direction or a continuation in direction. So if we put our hourly chart up and we bring this back, we'll just open that up a bit just to clarify this. What I mean by that is that, as you can see, as Asia opened up, we see a high come into place. The 3 o'clock candle gives us our first pullback candle. Now, some of the price action trading strategies that you'll see, such as Al Brooks and a few of the others, is that they will buy that first pullback in a strong trend, which we see here. That continuation is up. So the bottom of that 3 a.m. candle, the open of the 4 a.m. candle, was a buying opportunity on the longer time frame. Now if we go back to our 5-minute chart and just scrunch this up again, and we take a look at this, if we look at that time frame, so we're looking here at the 11 o'clock candle, what we're looking for is some evidence of two-sided trading. Now again, that's that 50% level. We know there's institutional order flow that came into the market there. That support level was somewhere in that 42.90 region. But what we do want to see is the market immediately come back into range, which we see here. So at some point traders would be looking to go long. Now if you were more conservative and waiting for that break to come back inside of the moving average, when that started to build that ascending movement, traders definitely want to be long when the market retests that old high back up here. So market's trending strongly into the US session. We've got a potential top in place as the US market opens up. As soon as we see that market make a new high into the US session, we know that we've got that trend is still valid. And why is that? Because again, we're just looking for the market to trade and make new highs and new lows. All this is in this area is an inside bar on the hourly chart. So again, staying with the trend, there was a significant amount of opportunity there for traders to take some fairly low risk, high reward with trend trades. And as the market proceeded in towards the close of the Europe session, we saw it form a top. So again, just looking at trading that first few hours of London, gave us our high and our low. If we go back to our 1 hour chart, we'll just pop this up. We'll spread this apart. Okay, if we looked at the candles here, we know that 2 a.m., 3 a.m., 4 a.m., our low for the session was formed at the 4 to 5 a.m. candle. So even if you're trading that 1 hour time frame, there was an opportunity there to go along with a 1 candle risk, and that's probably at least a 2 to 1 risk reward trade on the pound. Now looking at the pound yen, just pop this out. We'll go to our 5-minute chart. Again, same scenario. We use the same strategy. We're looking for the high and the low of Asia. In this particular case, because it was such a strong moving market, I would go at 50% level. You can use your fib marker if you want. I'm just going to ballpark that for now, but as you can see, that 50% level provided support. And again, we saw the market coming back to retest these highs and form that accumulation zone. Bulls were able to get in with trend to be in on that break and ride that trade up for a fairly comfortable, very strong move of 100 pips. As we went into the US session, we see the market, again, if we form our buying level, the market stayed above that and gave traders an opportunity to go along to retest that. If they did not take profit up in that upper area of the Europe session high, they would have been stopped out probably at break even. So there was a scalpable range there, somewhere probably 20 pips or so. The market was obviously losing steam. It did make another run up. You would have had to hold on to things through that sideways chop, which if you were just looking to scalp out some pips in that area, may not have really had a strong move until this trade over here that was fairly clear. So a little bit tougher on the pound yen, but definitely during the Europe London Open, there was a very strong move there for traders to capitalize on. Once that initial balance traded out, and again, if we look at our high and low for the session, the low was the 4 to 5 a.m. candle. The market came back up to retest that high, consolidated above 50% of that move, and then proceeded to advance in the north direction. Now if we take a look at the euro yen, again very similar to the pound yen, just marking off our high and low for the session, and again in a strong moving market we'll look for 50% level possibly. We see the market retest that on the London Open, again taking out the high. When we see that consolidation where the market is struggling to go down, it's had an hour roughly there and the market still hasn't been able to go lower, and it stayed above that previous range of where it found some resistance. So traders were able to look for that move where the market started to break out again, position themselves long, and the market exploded north. Now different to the pound yen, the euro yen actually gave traders a reasonably good opportunity to get into the market to go long again, a retest, and then long again. So there was another trade into the open of the US market, roughly in the 20 to 30 pip range at least. Just keeping it simple, looking at price action, looking for support and resistance levels, keep your risk tight. With any of these trades, you can see that if you're wrong, you should only be wrong roughly 20-25 pips max. So, look at your ATR, look at the time frame you're trading. Look for that 2 a.m. to 5 a.m. session for a high or a low to be established in that first 3 hours of the London market. Keep your strategy simple. Keep your trading simple and manage the downside. If you do that, you're going to see some great opportunities. We're going to look at some other setups where the market is a bit messier. And again, you can see here there was some clearly good ranges setting up. The market was giving nice candles, a bit of volatility. Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.